The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
If it's growth and income stocks you want to hear about, well, you've come to the right place, because our editor of our Income Investor Service here, Brian Hamilton, has uncovered a couple of growth and income stocks that he thinks you want to hear about.
Yeah, I got two picks this week for us, as usual. They're kind of little dichotomous picks. I got a tech company and a staffing company.
Yeah.
The first one, we'll go to tech company first, Texas Instruments. Now, they recently reported earnings. They beat the Zacks consensus earnings and revenue estimates. Now, they have met or beat both top and bottom line expectations for the past 9 consecutive quarters. And the last quarter was no exception. They saw revenues up by a little over 11%, and EPS grew by just under 40%. Now, they have two major segments. They both saw double-digit revenue growth because they say really strong demand for their automotive and their industrial products. Management also eased a lot of fears in the semiconductor industry, where they told us that the demand for their products has continued to grow. And we saw some reaffirmation with that with some of their competitors, with Micron, Intel. We're saying that the demand is continuing to rise. So that's a really nice reassurance from that company. Also, this caused Texas Instruments management to issue upside guidance for both EPS and revenues for next quarter. And they also gave us a really good news about their tax implications for 2019 and 2020. Now, they initially thought their taxes were going to be less because of the tax law, but they're even going to be cut even further than before. So that's a really nice driver for the top line for the next couple of years. Now, all this news, as you would expect, would cause analysts to increase their estimates. And I want to show you some interesting things on the detailed estimates page on Zacks.com.
Okay.
And first, we want to look at the agreement on estimate revisions. What we have a 100% positive agreement on the upside. Now, it's not just one or two analysts. We have 12 and 13 analysts all agreeing on the upside, which has caused the next 2 quarters to see positive revisions, and the next 2 years to see positive revisions. So the analysts are really looking at the semiconductors not peaking right now, but as really the cycle is continuing to grow. Another interesting thing is, which I kind of call the envy of the market here, is their price and consensus graph. This thing is just a marvel. It's just beautiful here. As you can see, since 2016, we've had this beautiful upside, increased growth here. And it's been on a really nice pattern here. We also are seeing increases in annual estimates to give us our nice growth story here. The company also, while they're growing, pays a 2.2% annual dividend yield. And so we got a great sector with the semiconductors expected to grow for the next couple of years, and a nice solid dividend payment as well.
But do they still make calculators? That's the question.
They do still make the TI calculators, yes, but they do a lot more now than what they did 30, 40 years ago.
Yeah. All right, BG Staffing is the staffing company, obviously, as the name suggests. Texas-based, right?
Yeah, they're out of Texas. Now, the employment situation here in the United States has really brought staffing companies front and center. We had the ADP report and the jobless claims report this week. The ADP showed that private sector had 178,000 jobs, while there were 14,000 less jobless claims as well. We have a big employment report tomorrow to really solidify this, but currently we are on pace to match the Fed's objective of an unemployment rate of 3.8% by the end of the year. Currently we're at 3.9%. So that's showing a really tightening of the labor market, which is great news for a staffing company, because you have all these big companies looking to fill these vacancies, and they're starting to really look towards these staffing companies. Now, BG Staffing is quite interesting for a couple factors. First, they're a little smaller than the bigger ones that you would see, but they have finance, accounting, tech, commercial, logistics, and they're in a multitude of states, not just inside of Texas. And they're at a nice little price here. If you look at their VGM score, they're at an A across the board, so they're a nice value and growth. They're trading a little in the mid $18 range. But their most recent earnings report is really reflecting this job market for them. They saw revenues increase by 17%, and net income jumped up by almost 90%.
Wow.
Now, you can really see this in their pricing consensus graph here on the web page here. And if we take a look, we can see since the second half of 2017 and through 2018, when the job market has been getting really tight here, and we also have year-over-year increases in their annual estimates, giving us our nice growth story here. But what makes BGSF really stand out is they pay a 6.43% annual dividend yield, which is massive. Now, currently the S&P 500 is paying about 1.85%, so this is 3 to 4 times bigger than the S&P 500, and we have a nice growth story for the company. And with the tightening labor market expected through 2018 into 2019, the next couple of quarters could be really strong for BGSF.
All right, and tomorrow that you referred to is June the 1st.
Yes.
In case people are following on the calendar, do you own either of these?
Personally, no, but I have Texas Instruments in the income investor portfolio.
All right, sounds good. Thanks for that. And more stock information is what you'll find on our website, Zacks.com. Get over to the homepage to begin browsing through it. With Brian, I'm Terry Ruffalo.